Welcome to The Explainer. Today we're going to break down 10 really powerful finance lessons from expert Humphrey Yang. But instead of just a list, we're going to turn them into a simple 4-part framework that you can actually use to transform your own finances. So, let's get right into it.
So let's just start with this question, because it's so important. The journey to building real wealth, it doesn't start with some hot stock tip or a crazy complex budget. Nope, it starts right up here, between your ears. It is all about your mindset. All right, so our first big pillar here is all about psychology. We're going to cover 3 key lessons that honestly build the entire mental foundation for your financial success. And this is way before you ever touch a spreadsheet or an investing app. First up, and this might be the most crucial lesson of them all, mastering delayed gratification. I mean, this is basically the superpower behind every single successful long-term investor. It's all about choosing future you over right now you. Sounds simple, right? But it's so hard to do, because our brains are just wired for that instant reward.
And here's how you make that kind of abstract idea super practical. Just think about it. Let's say you want to buy something for $500. Okay, you've got the cash, but if the thought of spending $1,000 on it, like buying it twice, makes you a little sick to your stomach, well, you probably can't truly afford it just yet. It is such a great little mental check.
And you know what? This same mindset applies to these huge life decisions, not just buying stuff. The source material actually talks about this exact choice. Do you take an immediate $20,000 pay bump to switch to a marketing job, or do you stick with a path that you know is going to be more fulfilling 10 or 20 years down the road? When you really zoom out and think long-term, the right answer becomes crystal clear, doesn't it?
Okay, so to wrap up this whole mindset pillar, it really just comes down to these 3 big shifts. First, embrace that delayed gratification. Second, you have got to stop comparing your financial life to your friends' Instagram highlight reels. Seriously, everyone's journey is totally different. And finally, you have to understand that any financial advice you hear, it's got to be filtered through your own unique situation and your own comfort with risk.
All right, so we've got the mindset as our foundation. Now let's move on to pillar 2, the core habits. Because these are the repeatable, day-in, day-out actions that actually build wealth over time.
And listen, you don't need some ridiculously complex system for this. The key habit is just consistently tracking these 3 numbers. That's it. Your expenses, your savings rate, and your net worth. It's what comes in versus what goes out, how much you're managing to keep, and what's the overall score. If you just track these 3 things and try to make them a little better over time, your financial picture will get healthier. Guaranteed.
Okay, first up, expenses. Here is a super powerful rule of thumb. Try to keep your big, fixed costs, stuff like your rent or mortgage, your car payment, under about 60% of your take-home pay. Why? It's simple, really, because that's what creates the breathing room in your budget. That's the space you need to actually save and invest your money.
Now, this is a really crucial insight. The most important time to save is right at the very beginning. I mean, your savings are never ever more powerful than when you're just starting out. Your one and only goal should be to relentlessly, aggressively build that initial nest egg. Let me show you why that is.
And this chart, this shows you exactly why. To get to your first $100,000, the math is pretty clear. About 77% of that money is going to come directly from your own savings discipline. Yeah, the market returns help a bit, but the heavy lifting, that is all you. All the friction is at the beginning, and that is where your focus absolutely has to be.
Okay, so mindset is set. Habits are being built. Now let's move on to pillar number 3 and see how all this builds into a simple, but believe me, incredibly powerful investing philosophy for real long-term growth.
Now, this might be the most counterintuitive lesson of the whole bunch. The single biggest mistake most investors make is trying to be clever. You do not need a dozen different funds. In fact, that usually does more harm than good by creating all these confusing overlaps. Your goal should be to make your investing strategy as boring as humanly possible. Seriously. And if you don't believe me, here's the proof. The data is it's overwhelmingly clear. Trying to outsmart the market is a loser's game. Over a 15-year period, a simple S&P 500 index fund, and that just means you own a tiny little piece of the 500 biggest U.S. companies, it outperformed 92% of professional fund managers. These are people paid millions to do better. Just buying the average puts you way, way ahead of the pros. So really, the whole secret is captured in this fantastic quote from Morgan Housel, who wrote The Psychology of Money. He says to earn average returns for an above-average period of time.
It's not about hitting home runs with these genius-level returns. It's about endurance. It's about simply staying in the game longer than everyone else.
And that endurance, it works because time is like this great smoother outer of risk. Just look at this timeline. The longer you hold your investments, the lower your chance of actually losing money becomes. I mean, get this. If you look at all the historical data for the US stock market, there has never been a 20-year period where investors lost real money after you account for inflation and dividends. Never. Time is absolutely your greatest ally. All right, on to our final pillar, and this one is so critical. It's all about playing defense. Because look, building wealth isn't just about what you make or how you invest your money. It's about what you manage to keep.
And a huge lesson here is to avoid this trap, what some people call the 30K millionaire. You know who I'm talking about. It's that person driving the least luxury car, but they're still living with their parents. The lesson is so simple. People who look rich often aren't, because every single dollar they make is being spent on appearances.
And this idea is summarized perfectly by this amazing quote from the classic book, The Millionaire Next Door. It says, if your goal is just to become financially secure, you'll probably get there. But if your motive is to make money just so you can spend money on the good life, you're never going to make it. True wealth isn't built by showing off your income. It's built quietly by consistently living below your means. The real goal is security, not just a bunch of fancy stuff.
So, there you have it. You see, it's not just a random list of 10 tips. It's a complete 4-part framework. It all starts with your mindset. Then it's powered by your habits. It grows through a super simple investing blueprint. And finally, it's protected by smart rules on spending.
But at the end of the day, all this knowledge is totally useless without action. The key isn't knowing everything we just talked about. It's acting on just one piece of it. So I'll leave you with this question. What's the one small change you can make today that your future self is going to thank you for? Thanks for watching.